guys, um let's do the analysis for today's trade. So this should be my second trade. Okay, so but first let's check out our first trade. I've taken first trade yesterday, which we hit break even and then market transfer our TP. I'm going to explain that, and then we are going to do check for setup on each of these pairs. So these are my favorite pairs here. So we are going to be going through them one by one. So the video might be long, or let me see if it's that long. But let's see how fast we can go. So firstly, we'll go to where I trade more of liquidity. So I usually look for where market sweep liquidity, both sweep of liquidity and structural liquidity. That's my first two things. So when I say sweep of liquidity and structural liquidity, this is what I mean by sweep of liquidity. Yeah, up, down, then up and down. So this is my sweep of liquidity, clearing the low and then going ahead to break the high. This is what I like seeing in the market. When I see this, I know that yes, I have it set up. So firstly, it cleared the low first and then comes high to clear the second high. So why is this high value? Why is this more high? Because when market pushes up, let me make it so you understand. And an uptrend of up and up. So the market is creating a higher high, higher low, higher high. It's not meant to take out the low. So when market takes out the low, that means that means this is a change of character. When it's taking out this low, this is a change of character, which means here will be your place to sell to continue going down. But what does market now do? They now go ahead and pushes this and take out this high, which means there was a lot of orders. The market has filled up here before it went to push to break this high. Yeah, people say that because there was a other block here. Yeah, that is part of the trading, because it have to look for an other block, external other block or external place for it to push market to the high. So for it to do this, to come to break this low, which this is liquidity sweep. Then what else do I look for? I look for my structural liquidity. I don't trade liquidity. I trade structural liquidity. So what is the difference between liquidity and structural liquidity? Structural liquidity is when, like, after I broke this high, it comes down and then it breaks the next high. It breaks that high that brought it back. So this is what I call structural liquidity. Why is it structural liquidity broke? Because it broke this high. So some people will say this is what I trade, but some people trade this after market comes down. It comes down, probably a little pullback. First pullback, they tell you first pullback is liquidity. Yeah, first pullback is liquidity. But I prefer to trade. Sometimes those liquidity does not hold price, especially when it's far away from the POI here, because this is very far from this POI. So what do I look for? I look for when market pulls back into this area, 50% of this area, and then breaks structure, which shows that yes, there was a lot of orders here left, because for market to leave from here, that means a lot of orders. So what would you expect? You expect market to come back into that POI and then what? And begin to buy massively. So this is where you now see where you see an impulsive move. This is where you really see those impulsive moves, because what we have sweep here, which is protecting this low, and we have another this is an inducement or a structural liquidity that makes market to push and impulsively. So any trade you see me take, you'll be seeing this kind of impulsive move to the upside. Why? Because of there is a sweep of liquidity, which means this high is protected. It's not meant to break it. So some people will take this as their liquidity from here, and then what you do? It didn't break the structure. You just come probably 50% pull back, and then you still take the trade. Yes, it might play out. Yeah, sometimes it might not play out. But why do I want to see structural liquidity? That is to show you that this market is still continuing up to the upside. That is to show me this market is still continuing to the upside. Now, this same thing that happens here, when markets push impulsively to the upside to break this high, that is the same thing that was happening here also. So this low is this low. Yeah, this is where this market came to take liquidity to push high. This was what a break of structure, a break of structure. So what are we saying? The same thing that happens here, that is the same thing that is happening here. That's to show you we are still in an uptrend. The market is not reversing anytime soon. So this is what I look at for in the market. And how do I do this? I do it from the daily time frame down to 1 hour time frame, and then I do use 15 minutes time frame probably for pullback. Like when this is trying to pull back, I'll be using 15 minutes time frame. When this market breaks structure in 15 minutes time frame, I'll know that yes, the market is bearish for this pullback. So we'll now see something like this, goes high to break the same thing, goes high to break this high, giving us a higher high, a lower high, then creating structural liquidity. And what do we have next? A strong pullback. So now with this now, because there's no structural liquidity or anything, the market will not change structure. This is very nice market changing structure. But meanwhile, if this market was, if there was a same thing happening, and if there was a structural liquidity at this point, like market came back and break this high, then what do? I continue with the trend because I still have this here that have given me a sweep already, a sweep here, and the market pull back into this area and then break structure. What do? I still continue with the trend. I still enter long position from here. Very good. This long position from here, targeting was this high. The same thing over and over and over until I can't find any structural liquidity to push market back. Like this, we have the break of this high, and then we now saw a change of character in 15 minutes time frame. 15 minutes time frame, then a sweep, a structural liquidity, and then what a pullback to enter, and then I'm taking out this flow because this flow is going out. So this is what keep happening every time, every day in the market. This is what keep happening every time and every day. So this is what I'll be looking out for. And how do I use this? Now let's go into the market and let me show you how this works. So first of all, I'll move to the daily time frame. Move to daily time frame. So I'll do one example of this. Because this video is becoming long already. So after this, I'll post another video for our our continuation for our documentary. So we have been a setup now, and then we'll also be looking for our setup. I'm giving an example now, and I'm also giving an example. So what am I saying? But let's go through it. I know you understand what I'm saying. So now, first thing first, we look for a break of structures in your daily time frame. Now you don't need to go when they will tell you to look down to see what is going on. You don't need to go far. Just look for your first 2 break of structures or 3 break of structures in the daily time frame. Any time frame, we are just looking for the first 2 break of structures. So we have this first break of structure, second break of structure here. Though we have this one also here, which is small, that sweep this high. What is this not telling you now? Now what I forgot to show you an example of this also, where markets will also create internal structural liquidity, something like a pull up, down, strip that low, Then before it created this higher high, sorry, before it created this higher high, it created a structural, internal structural liquidity. Like it goes up before it breaks this structure, it it pulls back, it pulls back and then break the structure. Now this is not my structural liquidity. This is a break of structure. This is a sweep, and this is not structural liquidity. Now this is an internal structural liquidity, not an external structural liquidity. So when I see this, I'll use this as my structural liquidity using my POI here, looking for market to pull back into that area and then I buy. So these are the two major things. So I'm going to really go down and explain all this, but I just want to rush because the stuff is becoming long. So what do I have? I have what? A break of structure to the upside, and then a liquidity sweep. It didn't break it, but here it swept that low. And then what do we have? We have the first pullback that didn't mitigate this other block. If we mitigated this other block, then we will not take this as our structural liquidity. So we have this as our structural liquidity. So we are expecting price to pull back into this area for a buy. Yeah, but this is the daily time frame, so it might not actually be playing out. Might not actually be playing out very soon. So what do we have again? Let's continue to we have a break of structure to the upside, sweep first, and then a break. Sweep first and then a break. So let me delete it. Let's make it up. I'll come back into that area. So what do? We know we are in an uptrend. We are trending high. We are trending high. So what do we now do? Go to 4 hours. Which we know we are bullish. So we are going to the 4 hours. What do I look for? My first two break of structure. I can see a break of structure here. And I can see a break of structure here. And I can see a little break of structure here. So this is 4 hours. So any break of structure counts. So what do I see again? I can see I'm in the uptrend. We are still trending more higher. Yeah. So I'll go back to 1 hour time frame to look for a setup. So in 1 hour time frame and 4 hours time frame, I always correlating. So what can you see in this break of structure? And this was the trade we took yesterday. Yes, this was the trade we took yesterday. What do we see? We see a break of structure, and we see a sweep of this loop, and see that minor sweep. What do we have? We have this up, higher high, higher low, then the higher high here. So we have this minor higher high here, higher low, then the higher high. What we do is bring that structure, another higher high. Now looking like market is trending down, and what do? It broke that structure. But before it broke the structure, what did we do? It left us with an internal market structure, liquidity, structural liquidity. So before it moved high to break this high. So what are we now expecting? We're expecting a pullback. So marking out our structural liquidity, and then what do we have? A POI for us to trade from. This you can use this rectangle before this, but I usually use my last candle before the move of that. So what do we have? We tap into that area and then a mover. If we want to refine this, what do we use? We can use the QRM app. The QRM is like here. If you can see this sweep, where this sweep happened, we take the body of that candle of that sweep, because why? This was a bearish movement and the market pulled back. Well, this is supposed to be a POI to push markets down, but what market broke it? So market broke it. This is now what the support that turns towards a resistance. So what do? We map it out. You can use your line chart to get it properly. What do? We mark out that part. And what do? Set your order on that part, in that line, and wait for market to push up, and wait for market to do his magic. So that is the refine. That's where I find my entry sometimes. But if I don't want to refine it, I can just use my order block and move. What the market do? It take me to that area and then what it pushes high. This was my TP here. But unfortunately, what did the market do? After this impulsive move, I went to break structure. I want to break the even on this high here. This liquidity sweep around that point. I want to break even here. And what did the market do? It start came back, take me out, and then move. Though I was expecting another, I had another because sometimes I usually refine into the lower time frame, like I said, to get an entry, second re-entry, right? After I had this, after market have taken me out, I went down to the lower time frame to look for the re-entry of that same. So what did I see? I see a bit of structure and the 5 minute time frame, which means market is bullish with this kind of impulsive move, and then I see a sweep. Remember, if I don't see a sweep, I wait for a confirmation entry. So I see a sweep and I see what a liquidity. The liquidity. What this liquidity do? It came back, it broke the structure, so which makes this a what they call it? Which makes this a protect what they call it, inducement. So now what made me to break even to this point? Because I saw this low. I saw this low here. After this impulsive move, I saw a break of structure. Then what do? I want to break even. So that is market is always looking for where everybody's stop loss is, so that it can continue that move. What did it do? It came back into that. He broke structure to the upside, and then what did it do? It came back and swept all the liquidity because people who wanted to re-enter at this point after they see this impulsive move, they wait for a break of structure and they want to re-enter in this point now. You can see it moves up, giving them assurance that the market is now bullish. And what did it came back, it swept all the liquidity and moved. So after that liquidity sweep, I was now waiting here on this my POI. And what did the market do? It just moved from after I saw that liquidity, it didn't tap into it and it just moved. I'll show you all this on my okay. I think I got the screenshot. Let me see. I think this is the screenshot. Yeah, so this was the screenshot. After the market came back and took me out, I looked for this re-entry. And what did the market do? It just came little. It did probably use this breaker block. That's very used to move. It didn't come back into that area. Other block, and then pushed higher, very high, and it keep going. So that's how I made this trade. And now, since we are here, what can we see on the daily time frame, on the 1 hour time frame? Let's see if you can still see other setups. So I can see the break of structure now. Then now I can now start to build my. Can see a sweep of this liquidity. Let me do this. So I can see a sweep of liquidity here. I can see a break of structure, and I can see what engagement. This is not my kind of engagement because it's just a one candlestick for the move. I would have loved to see something like this. You can see this like a two candlestick before move, but this is just a one candlestick and then move. But let us see if it will hold. So now in this kind of trade now, because I'm not really comfortable with it, what will I do? When market pull back into this area, I'll be expecting was to move down into the 5 minute time frame and look for that same setup again to continue the trend up. Because I'm not really comfortable with this liquidity here. So but anyways, let's see how it goes. So now we have a setup on step index, which is for market to pull back into that area and then give us another trend. So let's see what's going on the daily. Why market is pushing up this higher? Is there something? So we don't really know, but since it's keep pushing up higher, so we follow the trend moving down higher. So at this point, I'll also be expecting a pullback from that 1 hour time frame. So what do I do? At this pullback, I'll be going to the 15-minute time frame and wait for the pullback. So now, looking at this area now, what do we see? We see a break of structure here. Let's just take two break of structure and this break of structure here. So what else do we expect? We expect market to pull back. We have a sweep, yes. We have a sweep. But we don't have what? We don't have a structural liquidity. We can't say this is my structural liquidity because I have an up move, a down, and an up move, a break of structure. What is this? This is very far from my POI. So I can't take this as my structural liquidity. Assuming it came down a little, came down into this area here and then made this move. Yeah, I'll continue buying because I've seen the slip of liquidity here. But because I don't have any in there, social liquidity, some people will say there's a low here for you to buy from. Yeah, there was a low. What is this? This is the break of structure and that this is your POI. What do you expect? Market to pull back into that area. And you say this is a structural liquidity and then this is this is what your strip of liquidity. But will I take this trade? Hopefully if I see, so now I can take this trade, yes, because why? You don't have a structural liquidity in this point. And anyway you don't have your structural liquidity, what will be your structural liquidity is your low. This low here. So this low now becomes a liquidity for this low. Now what are we expecting? We're expecting market to pull back into this area and then pull back into to take this liquidity here, tap into this POI and what? Change structure, giving us that same thing. Sweep up structural liquidity down, then move. So this is what I'll be expecting if market come back into this area. Why? Because we are using this as our structural liquidity and this is protected. So here I can take a trade on this. I can boldly take a trade from that point here. Or I can also refine it for me to be on a safer side and then reduce my risk management. I can also refine it to this sweep here. And what do you see? What do you see on that sweep, on that QRM? It is on top of this. Now most times people say take your other block, and the other block don't include the week. So I usually include my own week here if I see a very good but now what is it is on top of the week. So I'll explain all these things later because of the, so I just want to rush because we're having I usually do 1:3. So 1:3, we're expecting a buy also here. Expecting a buy here. So two things. Oh sorry. This is not where I'm supposed to put that. This is where I'm supposed to put that. Okay. This is the low. Let me get the low correctly. So hope you are not confused because I can't take trade here because there is no structural liquidity on this line. So that's why I'm taking my trade here. And if you can see it, we have this here. So I take this trade from here. So my stop loss will not be that big. So if market even leave me and go, I will not be bothered because I find it. I know that yes, I find it. So that is it. That is it on step in this. Oh no, 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 I made a mistake. Let me go to volatility 25. So let me copy this. Volatility 25. Mhm. So volatility 25% now concentrating. Yes, so this is also a trade on volatility 25. I took this trade but not on my account. This was before I started this. So what can we see? The same thing. After we jump down from the 1 hour time frame here, and meanwhile, anytime I take trade, you see that impulsive move. Why? Because we have the inducement, and then we had this what do you call it? This is not a pulse. This is, well, you can also call it a pulse, anyways. So what do we have? We have a break of structure, a break of structure. Market shifted, right? It shifted to the downside. Now, what are we expecting? We have a sweep on this flow, but we don't have any structural liquidity. See what I'm saying? So now, where will we take as our structural liquidity? This flow here become our structural. And what did market do? Came back here, it sweep this flow, and then if it goes down to the lower minute time frame, you will see that that same setup happened around there for it to make that impulsive move to the downside. So what can we see? Let's check. Let's check. You can see a break of structure here. I see another break of structure here. And I see another break of structure here. Okay. And then a good break of structure again here. Let's go down. We saw that from 1 minute time frame, so let's go to 5 minute time frame. That's our full setup. So if you are looking for if your setup is on 1 minute time frame and looking for a the setup is on 1 hour time frame. If you are looking for setup, the confirmation to go to 5 minutes. So after taking that liquidity sweep there, you now have what? You now have a break of structure here, one, and then we have another break of structure here, two. So now, see what I'm saying here. First break of structure here. What do we have? Here we have a structural liquidity here. We have a structural liquidity at that point. Here, this probably in the future market will probably tap into it and then react to it, and you might not have that volume to react to it. What do we have again? We have another break of structure here. So what do you see? You can see a sweep here and a structural liquidity here. And what did market do? Came back into that POI. The POI here. And what did you do? Now looking at this, you can see the POI here too. That point that stretch the liquidity. If you draw it out, you can refine it to that point. What did you do? Market came back into that area, and then you can see the impulsive move. So now, when you have a sweep of liquidity and structural liquidity, market will always respect that high or low that sweep happens. If you can see, market came back the first time and the second time. And what did it do? It pushed. It could not able to break it. It pushed massively to the downside, and that's where you see that impulsive move. Impulsive move. So let's go back to the 1 hour time frame and continue this setup here. So that is just to show you what happened here, why you see this impulsive move. After the change of structure here, what happened? Market didn't give us a structural liquidity here. Because market didn't give us a structural liquidity, this is now automatically become our structural liquidity. Market tap into it and give us our setup here in 5 minute time frame and move down. After that, we have the same thing again, and then market moved down. The market shifted to the upside, came back, gave the structure. What is that telling me? It's telling me that we now have a liquidity, structural liquidity here. Don't be confused. Here is the base of structure. Here is the second. Here is the change of character. Sorry. Here is the change of character is when market comes from bearish to bullish. Now this is bearish. We have been doing higher low, lower low, higher low, lower low. Then it changes from higher low, lower low to higher high, and higher low, higher high, higher low, higher high. So what are we expecting? What do we see? Our inducement of structural liquidity. We have this point that market swept liquidity here. Swept this liquidity here, and then we have this POI around here. Our POI. So how did I get this POI? Because someone will say, why didn't I use this? If you also use this, market will also tap you in. So this is the last bearish candle before the move of the positive move. If you also use this, market will also tap you in and move. But what do? I went to the first here it was up. I went to the lower time frame, and then I use 30 minutes time frame to look for that. But let's use 5 minutes. What happened? You have to push to the upside, to push to the downside, breaking this low. Now this low is now protected because why? We have a break of structure to the upside, and then a break of structure to the downside. What the market now do? We reverse it back. I went to break that low, that high. Sorry. So what do you expect? Where was the last? This was the last before the break of structure. But what happened? Market came back into it and mitigated it. Push up. Market came back and mitigated this one. Now the push up. Market came back and tested this one, but it just with weak. It just with weak. Only weak. And then what do you do? Push high. That's why I use this as my. Assuming it came back and restarted it with full body candle. Like all these ones were tested with full body candle, full body candle, full body candle. But it tested it with weak and then it moved. So that's why I pointed to my phone and press and then push. So what are we now seeing here? We are waiting for a change of character. That's why we are 15 minute time frame. We have a downtrend. We want to break a structure here. And what happened? Market pushed down. After breaking this, it pushed down. What this point? This point is now our protected high because after market broke it, it came down and changed structure. And what are we expecting? We're expecting this low here to be our structural liquidity. Why? Because we don't have any structural liquidity. Market didn't create any structural liquidity. Unless this high here comes down and breaks this low, then we have this as our structural liquidity. That's why market has this way. What am I expecting? Even though market visual is low, I'm just expecting it to come back to break this low. That low there. To give me what? The structural liquidity for this POI to hold. So if it doesn't come back, that means this low will not be my structural liquidity. So that is how I anticipate in the market. So I'm going to stop here for now because we're already having like 30 minutes long. So this will be posted on the YouTube channel because this is so long for TikTok. So what are we expecting now? We have the buy on looking for a buy on index. I'm looking for a buy on index. I'm looking for this buy and also for a buy here also. This point here. So that's why we have this break of structure, structural liquidity, and we can use this as our structural liquidity because why? I mentioned two things. This is a break of structure here, yes, and it has a strip here, yes, which makes here protected. but it doesn't have a structural liquidity. This structural liquidity here, this pullback before the peak, is too far from our POI. So what are we expecting? We're expecting this flow to be our structural liquidity. And after this flow becomes our structural liquidity, what do we expect? We expect a change of character and then a pullback. That's why this point now become a very good point to buy from. This flow will now become very good. Now you can see this structural liquidity is closer to this POI. That's why I'm using it. If it's not closer to this POI, I will not use it. It's closer. So when markets try to take the liquidity out of this zone, it's going to tap into this high and change structure to continue high. I don't know if you understand. For beginners, you might not be able to understand this. I'll put you guys through some time in doing this documentary. But as a trader, if you're a trader, you should understand what is going on here. So I think I have some other setup on. Let me just show you the setups I have so that the live 15 minutes I have on volatility 10. Let's see this volatility 10. Oh, that's the market lets me now. Okay, so what is happening here now? You can see. Let's go to 1 hour time frame. Let's go to 4 hour time frame. I think I saw this setup on 4 hours. So what can we say? You can see a bit of structure, first bit of structure, second bit of structure. Now, all those things I was explaining was happening in all these areas. That's why market keep pushing up. See it here. We have a strip of this low here, and we have a break of structure. Before the break of structure, we have a pullback, first pullback that never mitigated this POI, and it broke the structure. What do you call this? People will not be buying from you. The market came back and reacted to it. Just react to it and then it came back, took out that liquidity, started into this area, break of structure. The same thing happened here. Why when this market broke this high with this power? So I usually market using the week. I market because when you go down to 1 hour time frame or 15 minute time frame, you see that it's actually breaking. So anything that is happening here is also happening in all the other time frames. It's just for you to refine it to your own level. Okay, so what now happened after it tapped into this area? It pushed high, it came back again, and what it never mitigated this area here, this POI here. And then what did we do? We moved and broke that structure. So what am I supposed to use this? This is now my words. See, it's very clear here now. This is now my words. Structural liquidity. That's now my structural liquidity now. You might see it tap into it, but if you look at it very well, it never tapped into it. Even though it tapped into it, I still have body candle here to trade from. So it just tapped into the week, but it never even tapped into that week. So I see there was a gap there. And what happened? Market rallied and break into this high. And what do we have? We have the pullback into that area and then boom. And you only see that impulsive move. When you see this impulsive move, that should show you that yes, you are correct. That's what will give you joy that yes, you are trading. See the impulsive move before you pull back and then continue. Impulsive move, pull back. So why did this pullback happen? It keep happening again after this impulsive move? Just to create another structural liquidity for this market to keep going up. And as you can see, we have a pull up. Assuming this market is not going to continue, it's going to just go with that speed high and then will break this high. And then when it comes back, there will not be a structural liquidity for it to move higher. So we have the structural liquidity, structural liquidity break, come back, have a sweep here. You can see this sweep, I mark it out. We have the sweep break structure, and then we have the structural liquidity here. And what are we expecting? We are expecting market to pull back into this area and then move. Now, why market moving from here? You can see there was what this is an inducement. Now, people will now be buying from here now, thinking that market is moving high, and they will see this. What do? They will break even or probably leave the market to be running. Market will eventually come back, clear all the whole liquidity around this area, tap into this, and then move. So that is, this is now a very good setup that I can even close my eyes and see without any this thing. Now you can see what happened at the pullback. Pullback, you go to 15-minute time frame to wait for that pullback. What happened? Another preview. Can you hear me on the light? Okay, no worries. I will do it. So what do we have? What happened here? We have a break here, and then what happened? Market pull back and break the structure. We have the first break of structure here. Now this side is protected. Why? Because we have the first break of structure to the upside, and then came back to break this side, and then pull back. Give us a structural liquidity and break structure. Now what do we have? We have a POI here. What that POI do? Came back, we tap into that POI and consider impulsive move to the downside. Now we have a break of structure in this area. Let's see if we can get a trader for this. And then we have this can be my structural liquidity, but I can manage this as my structural liquidity. So I can manage that as my structural liquidity. The market will come back into this area and sell. But I'm not too comfortable with the structural liquidity that I'm seeing here. It's just a minor pullback, and then if it's something like this now happened around this area, where I'll be looking forward to sell without my whole chest. And what I usually see, there's no liquidity sweep. Okay, you can say there's a liquidity sweep here. Yes, you can say there's a liquidity sweep here. This was given the initial sweep before the pull. So yeah, this trade can play out, but it doesn't get to my rules of taking trades. Because for me to have this as my structure, it has to be a very big, a very clear pullback. And this is not really clear. This is just a little minor pullback, and then it moves. And I've made something like this happen around this area. Why? Because I always like to buy from this is a bit of structure and the mark to this high. This is not up to 50%. You didn't get to 50% of that range. So it might come back into this area now and sell back because we have a bit of structure here. So we have a bit of structure there. We have what? Structural liquidity here. We have a sweep there. We have a structural liquidity here. So you can see probably market is reacting from this POI here. That's why you can see that first doji candle. So probably from there market will start pulling back down. I can't take this trade because it's closer to my when I have a good setup here. Why should I not be gambling with little things here? Assuming it happens around this first pullback like this one now, I can take this because it's no more. If you check this trade now, you check the full range, we are no more in the discount area, we are no more in the premium area. Remember, you sell from you're having a pullback. See where we are. We are now in the discount area for us to buy. We are now very much in the discount area for us to buy. So I don't have to start buying when I'm already in the discount area. So this is our premium zone. I think it happened around here, like this first move, we took it down. So let's wait and see what will happen. This almost 1 hour trip. As you can see, this is a good sign that it's going to pull back down. Well, you all just have to be patient and wait for the bigger fish to start looking for a smaller fish. You can see what's happening. The same thing keep occurring every time. So now, if this market now is going to turn bearish, what is it going to do? It's going to start into this area and then push massively. Now this massive push is going to be not going to give you a structural liquidity. It's just going to do something like this. It's going to, as it's coming down, then it pushed. So now what are we having in this area now? We're having a double top, a double bottom, sorry. double bottom. That is now clearly giving me that this point is going to hold very well. So what are we if this market is going to continue bearish after this impulsive move? We first have this impulsive move. It will not give us what is giving us here. After the first impulsive move, then came back, give us structural liquidity for its peak. It just give us straight impulsive move. Straight impulsive move. Now, when market is retracing down, it will not have anything to push it back up. It will not have any liquidity or any PI to push it back up. What will it now do? It will come down straight and break that structure. Now giving us a market shift, market structure shift here. But if it will still continue going higher, yeah, it might also come back here, tap liquidity from this area of supply, yeah, this area here, tap into it, and then give us the same. Then we look forward, the same up and sweep that low again, or it might not even be that low, up, then high, structural liquidity, another high, then come back into this area, and then boom. And it might not break the structure, it might just give us a little push and then come back again. So at this point now, you now know that the market is becoming weak at this point. When you have this kind of move, you now know that market is becoming weak, so you can now be refining it. You can see how it's pushing massively down. You can see how it's pushing massively down. Let's go 15 minutes. You can see that first pullback. So that is it. Keep happening everywhere in the market. It keep happening everywhere in the market. So let's see if it will hold to push us into this thing and then we move. So now I'll be setting a buy limit on this and also a buy limit on volatility stock index also. Stock index. Yes, I'll be putting through. I'll check for other pairs. I don't want to use almost 47 minutes recording, so I'll just wait. I'll check other ones, other pairs like volatility 700. I'm sure I'll have the setup on volatility 700 also. 75, sorry. Let's just check that quickly. Okay, yeah, what is setup now? Market is pulling back into our area of setup for it. I have a sell. What do I have? I have this high. After I broke this high, I'm expecting what a pullback. But what did the market do? After I broke this structure here, it came up and stood that high. Now what did it came back instead of breaking this high, we used that liquidity there to push up and then virtually break it to the downside. After breaking it to the downside, leaving us with the structural liquidity for me to tap into it. Though it mitigated this other block here, but this is a 15-minute time frame. So when you are going to the lower time frame, you see another. You see other blocks that haven't even been mitigated at all. So that's why I took my other block. And why did I take this trade? Because here we have the structure, we have all our still we're looking for there. We have a very good structural liquidity, very good structural liquidity. You can see the movement up and down, not like a small movement. Then what do we also have here? We have after this first break, second break, we don't have any structural liquidity. We can come back into this area and start selling. But I didn't pick this area because this has mitigated this. When I went to the lower time frame, I didn't see any other POI that is still available at that point. You can see this pull up, pull down, then pull up. It mitigated it, and then pull down, pull up. It also mitigated this. So that is right. But if you can see this one, after pulling up, pull on, it didn't mitigate this area. That's why I took my fear. Assuming there was a left of POI here, I would have taken a sell from there. So that is very much it. See you guys later. Alright. So keep soon. I'll also be sending some updates on TikTok. So make sure you follow me on TikTok. Thank you.